This is the briefing for Friday, March 1st. Well, we finally got a breakout in the stock indices. For about the last several days, we've been in an area of rotation and really just unable to break out. This is a 15-minute chart of the spiders, and you can see this goes all the way back to the rotation that starts on February 22nd. So you can see all these days that we were in rotation with an upper extreme at 510, unable to break out, but we broke out today. And as you can see, it was a fairly sustained move. Same thing occurred in the Qs. You can see the rotation. This goes all the way back to February 22nd. And then, of course, this is today's breakout, which suggests that we are now headed back to all-time highs. Now, the question to look here is this sustainable based on the market internals? And I think that the market internals are not really diverging that greatly, but there are some divergences which give me a little bit of concern over whether or how sustainable this breakout is. Now you can see this is NYSE breadth, and you can see the divergence that occurred going into the high, even into the high of today. You can see that, and the same thing with the Nasdaq. This is Nasdaq breadth, so you can see the divergence that occurred there as well. So if this move is going to be sustainable, it's going to be very important for the market internals to begin to increase to support price development or the price breakout that we saw in today's trading. Now, my biggest concern, and I've discussed that in the briefings during this week, is that of volume. And volume is just really not very significant at all. And you can see even in today's trading, this is today's trading on a daily basis for the spiders, and you can see volume declined even in today's trading over what we saw yesterday, which was a day where neither buyers nor sellers could gain control of the market, and we had a buying tail and then a selling tail during the day yesterday. 52-week highs minus 52-week lows expanding nicely, but you can even see in today's trading how breadth was even lower than it was in yesterday's trading, even though we have a higher high in the spiders. In the Qs, basically the same thing. We had an area of rotation here. 440 was upside resistance, and of course we broke out today in today's trading. Volume basically flat between yesterday and today. And breadth, you can see breadth is diverging as well in the Qs. Support in the Qs is going to come in right around this 416.50 area. And before we get to that, the support is at 440 now, which was the breakout point, and then about the 416 area. Going back to the spiders, 510 is support in the spiders now, and then of course resistance is the previous day's high, which is today's high. Looking at the Russell, you can see the Russell in a pretty significant area of rotation. This goes all the way back to December 13th. Resistance was at the 205.50 level. It broke out of that, closed at 205.88. So really right at resistance, not really above it yet. So that is really support and resistance for Monday's trading. Below that, 200 is going to be support. Volume down, breadth down. Not a whole lot of significance there in terms of the markets or the internals supporting the market price and the price development that we saw in today's trading. We're neither overbought nor oversold. This is the NYSE. We're basically neutral there, neutral in the Nasdaq as well. So really not giving us an indication of what to expect in the coming week until we get to a point of being extremely overbought or extremely oversold. Then it gives us a pretty good indication of the potential next directional move. Now, looking at the percentage of stocks above the 50 and 200-day moving average, this is quite a divergence. This is the percentage of S&P shares above the 50-day moving average, and this is the 200-day moving average. So you can see the divergence, what's happening here, this deterioration that was occurring even as price was moving higher. More and more shares were trading below their 50 and 200-day moving averages as opposed to above their 50 and 200-day moving averages. This was a result mainly of several higher weighted stocks that were carrying price higher, even though the majority of stocks were not following along with it. 200-day moving average kind of flattened, but really not increasing. You expect to see this type of move. So you can look at this move here and this move here, and you can see the move in price development and then the divergence that begins to occur and is still there. This is pretty significant information. In the NASDAQ, the same thing is occurring. Percentage of stocks above the 50-day moving average, you can see the deterioration. Certainly, we've got a little bit of improvement here, but nothing that you would expect to see if this is the move here up to this price point, which comes in right around the 410, 411 area, and then we've moved all the way up to the 445 area on fewer stocks trading above their 50-day moving average, and certainly not an increase in stocks trading above the 200-day moving average. The same thing is true with the spiders and the NYSE. This is the Russell, same situation, area of rotation, deterioration in the market in terms of 50-day, stocks trading above the 50-day moving average. A little bit of improvement here. Same thing with the 200-day stocks trading above the 200-day moving average, and you can see the rotation here. So really not a whole lot of strength coming in. We always have to support price development, and at least we have to listen to it. It probably has a higher weight. As I study price development and price structure, I always lean heavily on price development because we have to respect the trend. And at least on a day basis or short-term basis, the trend in price is up because we've broken out of these areas of rotation. But I am always skeptical, and it gives me a pretty good risk assessment if the internals are not confirming that. Now, this is a one-day breakout, and certainly what we don't want to see is the internals just absolutely skyrocket on the first day. What we want to see is we want to see a building. We want to see more and more stocks beginning to participate, and we want to see more and more buyers coming into the market. So we want to see volume increasing with each passing day, and the other internals beginning to increase with each passing day, and not to see an exhaustion move where you get a whole bunch of volume coming in all at one time, and then you typically get a reversal. So want to see the internals begin to build to support price. So next week, want to watch the internals very, very carefully, assuming price can hold above these support levels right now, which is 510 in the spiders. We're looking at 440 in the Qs, and of course the 205 area in the Russell. Should be an important week next week in terms of whether the internals are going to support this breakout or not. Have a great weekend, and I will pick this back up for subscribers on Monday.